Hello, learners. Welcome to online classes. This is a program for online classes, which we are intending to help the students who are doing the CASNET exam, specifically from December going onward. So this is our number. If you want to reach us, you can reach us on that one. But today, we are not going to see what majorly about when you can call or when you can text, but we want to see the what's called the financial management. Financial management or fundamentals of finance, that is called FOF. This is a unit which is under intermediate level with the current syllabus with the CASNET. And with this financial management, you will be able to be a finance officer, a financial analyst at the end of the course. So we want to look at the topic number one. It is not topic number one, but mostly what we normally start with, that is a time value of money. Time value of money. So as we all know, what's the money? If I ask you, what's the money? So a money is what? A medium of exchange. So a money is a medium of exchange. I give you money, you give me what I want. That is a money. So in finance, this money, it have its value. So one hope you have today, it should not be the same as the one hope you will have tomorrow. So it has to what? To increase in value. So if you have one bob today, tomorrow should be what? Two bob. That's the concept of what? Time value of money. The money keep on appreciating. It keep on appreciating. And so you want to see a definition of time value of money. And to say definition of time value of money is what? Is determination of future value. It is determination of future value in bracket compounding. In bracket compounding and present value in bracket discounting. In bracket discounting of expected cash flows. Of expected cash flow. The one bob I was talking about is the what? Expected cash flow. Today we expecting to receive one bob. Tomorrow that one bob should not be the same. It has to what? To increase in value. That's what we reverse at what? The time value of money. The time value of money. I hope you have taken note with that. Let me wrap this one again. That is the definition. We say it is determination of future value, a present value of expected cash flows. That is the definition of time value of money. In time value of money, again, we have techniques. We have two techniques. We have techniques. We have techniques which we are using here. So we have one technique is compounding technique. We have compounding technique. Number two, we have discounting technique. So we will use these techniques to evaluate our time value of money. So when we say the compounding technique, this is where we are getting what? We are determining the what? The future value. And discounting techniques is where we're determining what? The present value. So what, again, in compounding techniques, so allow me to wrap this one. In compounding technique, again, you have techniques here. We have a technique of a lump sum. We have annuity. And we have infinity or perpetuity. We have infinity or perpetuity. What we say a lump sum is that it is the payment of amount once in a while. So you pay amount only once, either at the beginning or at the end of the year. So lump sum means payment of amount only once. So these ones mean payment of amount only once, either at the beginning or at the end of the year. And annuity is the payment of regular amount. Payment of regular. So payment of regular amount every year. That is what? An annuity. And infinity is that you pay, you don't have the specific date. So that is the techniques of what? Doing a compounding techniques. So how do you identify this one is a lump sum, this one is an annuity, and this one is infinity? So most of the students, they fail these discounting techniques or compounding techniques because they don't know, because it is not that they don't know the concept, but they don't differentiate which are these types of cash flows. This one, it uses irregular cash flows. This one uses the regular cash flows. Once you are identify that, you are good to go. So how do you identify the regular cash flows and irregular cash flows? For example, let me give you, let's say I have a project 1 with year 1, year 2, year 3. That's my project. I have cash flows here. Let's say in project 1, you have 200. Project 3, I have 300. And project 2, project 4, I have 400. So once you have been given in this form, you have to understand which kind of cash flow is this. This one is what we call it what? Irregular cash flows. Irregular cash flow, and it is a lump sum. You only pay 200 once in year 1. You don't pay again in year 2. The same case with 400, you only pay once in year 3. That's why we say lump sum is the payment of amount only once. What about a regular cash flow? So the regular cash flow will be all the same. So you will take 200 all the way to year 5. So that's what? Regular cash flow. So this one is the regular cash flow. We turn it as a regular cash flow. That one is a regular cash flows. And what about infinity? So infinity, we don't have the year, we don't know the 100 years, so we don't know which time will mature. That is what is called what? Infinity. Okay. So let's start with the lump sum. We see the formula of a lump sum. So once you register, we will give you the notes, and we do illustrations from our past papers. We do revision. After the last time, you are going to sit for your exam. So kindly, if you are want to do either you are intermediate level, CPA, and diploma level, that is in the level 3, join us. We continue as early as this. So when we say compounding, we need to see the formula we are doing to see the compounding. So how do you get your future value? Future value equal to present value we discount, that is 1 plus r raised n. That's how you get the future value. So our BF is the present value. So they will give you the present value. And R is the rate. And N is the number of years. So this is the formula of getting the future value using a lump sum. So that is for lump sum. And for those who are doing diploma, you can refer to the May 2016 question 3. So if you have any questions, please, you can call us on that one. We do enrollment, we start with class. We schedule class based on your timeline. So we don't have the fixed time for each for each individual. We arrange your time. Also, we can come where you are. We teach you again on this. So thank you so much. Please again subscribe to our channel. That is a YouTube channel, so that in case you have any update, you will get there. Again, we will do so many questions and we will post there. So thank you so much.